Good morning, Alex Cole, and welcome to the new GoNoGo Charts show on StockCharts TV. How are you doing today, my friend?
I'm doing okay. Good morning. How are you?
I'm doing well. It's January 13th, 2022. This is the second installment for those of you who caught the show last week. Thanks for coming back to tune in. Alex, let's dive into what the heck is going on in today's financial markets, taking a look through the lens of GoNoGo Charts. Starting with a cross asset class look at just the trend. Let's remove all the price action and just look at what is trending and what is not.
Yeah, I mean, this is our asset map. Like you said, just looking at the GoNoGo trend on a pure trend basis across the major asset classes. We are looking at a rebound really towards the end of the week in the equity markets. Had a couple of sell-off days, but finished the week strong. So SPY, representing the equity markets in the top panel, is back into a go. We're seeing treasuries. This is bond prices. Treasuries have rolled over this week back into a no-go. Commodities have resumed their go trend in full force, and that's interesting given the commentary that's around the long-term super cycle people may be expecting in commodities. And the dollar, interestingly, which has been strong for some time, this week rolled over into a strong no-go. And of course, Bitcoin, has been in its pitiful state now for a few weeks and trying to rally as it hits the lows. But that's a quick glance across the asset classes.
Yeah, I think the intermarket perspective is fascinating. As you said, the U.S. dollar has held up really strong through 2021, despite some inflation pressures and some speculation about what the central bankers are about to do. We're seeing that inflation really take hold, maybe less transitory than Chairman Powell once said, obviously reflected in the commodities prices. And now that inflation target might be a little higher than we wanted, U.S. dollar is starting to roll over, and we're seeing that transition happening in real time. Alex, this is great, but let's dive into the equity sector, near and dear to a lot of investors' hearts, because that's where a lot of their assets are put to work. So if we were looking at the S&P 500, but we wanted to understand the relative performance of each individual sector against the benchmark, we could look at a ratio chart of each one of those sectors against the S&P. But here you developed a beautiful relative strength heat map showing all of the sectors in their relative performance, the trend of their ratio against the S&P. So let's walk everybody through it.
So as you said, relative strength is such a powerful tool, and you can take each one of these sectors and just create a ratio to a base index. And if that line is moving up, you can say that the sector is outperforming. If it's moving down, you can say that it's underperforming. So just the idea of using ratios to give you a sense of relative strength is very valuable and is something that's used in the industry a lot. But what we wanted to do was apply the go-no-go trend to the relative strength ratio so we can get a sense of the trend of relative strength. And that will really help, hopefully, with allocation, with understanding leaders and laggards within the market as a whole. So here, each panel represents a sector, but the go-no-go trend is applied to the ratio of that sector to the S&P. And what we've been noting in our research over the last week or so is that rotation again away from the large mega cap growth sectors such as technology, communications, and back into the cyclical sectors, things like materials, industrials, energy, and financials. So that's what we're seeing here. The top panel is materials. We see that staples has been strong for a little while, really sort of thriving in the volatility that we've seen in the markets. And then we've got this rotation back into energy, financials, and now also industrials, this middle portion of this map showing that rotation away from the growth and large cap technology stuff back into cyclical sectors. And then you see these two panels right below, the technology sector has rolled over, joining communications, which has been struggling for some time.
It reflects perfectly what we would expect in the prior chart. We saw treasuries selling off in terms of prices. Remember, those move inverse to the yield. So higher interest rates make companies with really stretched valuations, high multiples, less attractive to investors, and we're seeing that rotation back into the cyclical sectors. This is a pretty familiar waltz. We've been dancing it all through 2021, Alex. It seems we're back again, and when those yields start to spike on U.S. Treasuries, we see that rotation from growth to more value-oriented sectors of the marketplace. So let's take a look. Let's unpack for a second just the trading behavior in the technology sector, and just see what's happened this week. I know we've seen a lot of pressure hitting growth stocks, but if we were to look just at the XLK and see how that sector performed this week, have we caught the bid, Alex? Are we back in trend? What's GoNoGo chart?
Well, so on a daily perspective, we can see that the move has come out of the Go trend. We saw a string of the amber bars. Now we've moved into pale pink no-go territory. Now, like you said, the rally towards the end of the week, this is interesting because it's pushed our oscillator back to the zero line, but this time from below. Now, this chart, there's a lot in here that you might want to just sort of quickly scan and get an understanding of. We saw higher highs in price, and we saw quite long, drawn-out divergence from the oscillator as we went into this ultimate peak in price. The oscillator itself then broke below the zero line as we painted this string of amber goldfish bars, and we've also seen this, breaking below. If you put on an upward sloping trend line here, the color change happening on a break of support, leading to then that final trend change. But what we're now looking at is, as prices have rallied, we want to check now to see what happens at the zero line. Will the zero line now act as resistance, as it, of course, often does in a no-go environment? In which case, if we roll over here and we find rejection at the zero line, we will expect then to see a new leg down in price. Now, of course, if this rally is strong and this correction was to be short-lived, we may see the oscillator break back into positive territory. That would be a different situation.
Really well said, Alex. I like the way that you can use any of the traditional or classical technical analysis concepts with GoNoGo charts. So as you mentioned, TA 101, this is how you and I were taught in the CMT Association. A divergence of momentum means that as price is making those higher highs, we're seeing a divergence in the momentum indicator, and that's the GoNoGo oscillator in the bottom panel. So right now you'd be looking to see the GoNoGo oscillator break back above that zero line, that level, the objective level of support, that neutrality. And if we were to see positive or overbought momentum, potentially a trend change back into the Go trend for the XLK. Is that correct?
But that's absolutely right. But perhaps if not that scenario, there's the rejection or the resistance found at zero, leading to that no-go trend to continue, perhaps, and that correction that we're in to be drawn out perhaps a little bit longer.
Very good. So that's, again, we're looking at this orange line in the bottom panel. That's that objective level of support for the momentum oscillator. Remember, it kept finding support, rallying back into positive territory throughout the Go trend. And when it broke below zero and sustained negative momentum, that's where we saw the sell-off and the trend change into those no-go pink bars. That's the weaker form of a bearish trend condition. So all else being equal, if it's in a no-go trend and momentum is negative, we'd be looking for that zero line to provide some resistance.
That's right.
Excellent. So let's dive into the tech sector. Let's look at a couple specific names, familiar holdings for many investors. Why don't we pull up Apple first? Just see what's happened on an individual stock level basis.
Yeah. So
Great.
Apple, a giant, obviously, and has been an outperformer in the recent months.
Yeah, just crossed the 3 trillion threshold. That's great.
Yes, yeah, market cap of 3 trillion, unbelievable. But what we're seeing now is a real testing point of the strength of this trend. This is a critical juncture. We've seen throughout this Go trend over and over again that zero line acting as support, giving us low risk Go trend continuation icons, allowing us to participate in this move and perhaps getting opportunities to enter the trend. More recently, as prices moved sideways and consolidated, we see that zero line being tested again. And actually, we've flirted with negative territory as we've dipped below the zero line, but we've come right back to it. So this is an important moment. We would need the oscillator to go back into positive territory, which would be a healthy sign for the Go trend. If this zero line here acts as rejection, let me move the chart over a little bit. If the zero line here acts as resistance and rejects the momentum oscillator, then we would expect some continued struggles for price here, and perhaps even an inability to maintain those Go bars.
Excellent. And Alex, let's just talk to the listeners for 1 second about those orange grids forming on the GoNoGo oscillator. Tell us a little bit about the volatility indicator that's baked in here too.
Yeah, so the GoNoGo squeeze is the indicator that allows this grid to build. And what we'll look for with that is, if you're familiar with Keltner band squeezes or Bollinger band squeezes, the idea of shrinking volatility and the idea of price consolidating and having less price movements, eventually leading to a pop or a sort of a blow off and a renewed volatile move. And so when our oscillator rides the zero line, remember the oscillator is designed in a way that when all of the inputs, the momentum inputs, fall into their neutral territory, then our oscillator will fall to the zero line to give that objective level of support and resistance. When it stays at the zero line, which it does here, for example, and then again over here, for every bar that the oscillator stays riding the zero line, the squeeze grid climbs. And so we can identify visually those periods of reduced volatility in price. And then when we get a break out of the squeeze, typically that can be quite a significant move. After this period of reduced volatility, a break of the squeeze combined with this Go trend continuation icon leads to a fairly significant move. So what we're looking at now currently is the oscillator starting once again to ride the zero line and the beginnings of a squeeze grid appearing on the chart.
Absolutely. It's beautiful to see the behavior of investors visualized so clearly, and that tug of war between buyers and sellers. Having watched Squid Game, maybe tug of war is kind of a grotesque reference these days. But when one side takes over, you see all the dominoes fall in that direction. And in the middle of this chart, we're seeing the breakout of that squeeze to the upside, confirming the recent start of the Go trend and really seeing price take off. So there we are, flirting at the zero line again and potentially building a little more squeeze. Alex, let's take one more example from the tech sector. Why don't we pull up Netflix? There are leaders and laggards in every sector of the marketplace, and here we have a company that has not fared so well in the tech sell-off.
Hasn't fared as well, perhaps just further ahead in the rotation than Apple. If we were to move this chart to here, this is a very similar chart to the Apple chart, right? The brief flirtation below zero, the failure to make a significantly higher high, sideways consolidation in price. So, this is interesting. Could this be an example of the tech sector as a whole struggling? In which case, what does that mean for Apple? But if we just take it at face value on this chart, then we can step through what's happening. We saw these highs in price. We saw again the momentum divergence, making lower highs. And then we saw the break of the zero line, the retest, and then the rolling over coinciding with the no-go trend. More recently, we've had the oscillator rally to the zero line and ride the zero line. There's that squeeze that you were talking about, max grid of the go-no-go squeeze. And then as it found the resistance at the zero line, as we were just talking about, watching Apple for that kind of scenario, we got the rollover back into negative momentum. And that gave us this low risk, no-go trend continuation icon, indicating to us that there would be a fresh leg down. And at the moment, we look to have set these lower lows on price. Now, one of the things, Tyler, that I know we find value and we talk to clients about is the ability to still do traditional technical analysis on the go-no-go chart, because there is nothing else on the panel. So if I was to go and put in a trend line here, this was a line that we had on the chart for quite some time. And we
Mm-hmm.
can see how we can, quickly put this on because there's nothing else on the chart, but also that we find anecdotally that color change often coincides with important price action. So on a break of a trend line, a break of significant support, we often see color change in the go-no-go trend indicator. So to see that amber go fish bar there significantly break the trend line that we have on here, right after we saw the oscillator break below zero and then fail again at that level. That was all sort of adding weight to the opinion, perhaps, that things were not healthy for Netflix. And then, of course, the no-go followed right after.
Absolutely. And the logic makes sense. Those colors are based on a really heavy set of maths and a lot of computation in the background as you blend a lot of trend following indicators into a single indicator here. So that would make sense that we would see trend change at those momentous breaks of support or trend line. And nice to see that GoNoGo charts can help those who play to the short side. If you've shorted Netflix and then saw that ride of the zero line and the building up of the max squeeze, that resolution gave you another low risk entry point to the downside. Well, let's take a break then from beating up on the technology sector and looking for short trades.
Yeah.
Let's talk a little bit about what is working in this quick rotation towards the cyclical sectors. Why don't we start with everybody's favorite chart, the energy sector? And we've seen demand for oil as the economy came back online in the spring of 2021. We saw a lot of price gains in crude and U.S. oil, and now we're seeing again that the energy sector is outperforming the index as a whole. That's a strong go trend there on the right side of the chart, Alex.
Yeah.
What are you looking for here?
The same again. You saw this real sort of, off-tested and significant resistance throughout this consolidation period. And we would look to the oscillator then to give us a clue for when that resistance might be over. And we notice that as the oscillator breaks into this below zero into negative territory, that lines up with this correction or this heavier period of consolidation that we saw. But towards the end of that, on these weaker no-go bars, the oscillator again able to break into positive territory and then find support there quickly as price broke above these levels of resistance. And really, since then, it's just been off to the races. Obviously, right now, the oscillator is overbought on heavy volume. Now, again, we know, you and I know, overbought is not a bad thing.
No, not at all.
Strong move. So.
Yeah. And you mentioned the heavy volume. That's when the go-no-go oscillator changes from that aqua color to a dark blue.
Right.
And the dark blue signifies those areas of high relative volume for the energy sector. This is great, Alex. Thank you. Let's dig down a little bit further because we've seen the industrial economy starting to outperform a lot of the cyclical and value sectors. Why don't we look at some of the materials names, something like Rio Tinto that's really formed a nice big base and now broken out to the upside. Remember, Rio Tinto is a very large international conglomerate of mining companies, a lot of industrial metals. And what are you seeing on this big base breakout, Alex?
Yeah, absolutely. We've been looking at materials, and we've been talking about the use of commodities, and this is obviously a very large metals mining company. And this is something that caught our eye a little while ago. You can see these. I've just thrown on these horizontal levels that show historical support and resistance on this chart. And when we saw a few weeks ago now the break above zero and then the support at zero, then the color change, the goes identified, fresh support at zero. Right here, this green circle is our, one of our favorite things to look for is the first trend continuation icon once a trend has been identified. And so there it is. That's a very, very healthy sign and something that we like to look for.
And that's
But
the
we also
retest of the zero line for momentum for the oscillator,
right.
and seeing it resurge in the direction of the trend.
Exactly. Once the trend is in place, that's the key point there. The trend is in place. The trend has been identified, but
Mm-hmm.
then the retest tells us that momentum, like you just said, has come back in the direction of the trend that's just been identified. So that first green circle is a
Mm-hmm.
really nice, way to look for a setup. Same thing on the other side. If you get a new no-go identified, you look for that first red circle, that first retest, and then that first indication that momentum has come back. Now, this time in the direction of the no-go, so negative
Mm-hmm.
momentum. So
Mm-hmm.
right here would be that sort of idea of getting into a new trend on a retest. And so we saw that earlier on in the chart. Now, these lines that I put on here just demonstrate so many of the foundational concepts of technical analysis, things like polarity. We saw this level acting as support and then
Mm-hmm.
acting as support. Once that level was broken, we then see that level acting as resistance. And
Mm-hmm.
there's that concept of polarity. And then again here, this level, support, support, support. Once
Mm-hmm.
that level's broken, resistance, resistance, resistance. So once we combine all of the go, no go information, along with the fact that at this point where we're seeing all of this happen, the new go, the oscillator above zero, the green continuation icon, and now breaking above this level of resistance,
Mm-hmm.
we see this run up in price. And now we actually talked about it again right around here when we see this break of this second level of resistance.
Mm-hmm.
And we're still in good shape. We've moved higher. We gapped higher a couple of days ago. And again, just like we saw in the last chart, overbought on our oscillator on heavy volume, reflecting the strength of the move.
Fantastic, Alex. Really great classical technical analysis, as well as the concept of trend.
Now,
Yeah.
one thing that I might mention here is that you are approaching, if we
Back the chart up a little bit.
we are approaching right here another level that could be considered horizontal resistance. So you see the resistance here. So there's some overhead supply here, perhaps. And right at these levels, we could see a pullback. And then we would watch for the oscillator as it returns to zero. Does it find support? In which case we would then pay attention to what happens next.
Right. And that's overhead supply, or what we would look for in terms of resistance, is investors who bought it back in September that are looking to get back whole. We all face the same behavioral heuristics, and that's what we see play out on the chart. People anchor to very specific prices, and so here we'll see if Rio Tinto can break above the next resistance line. Alex, let's switch gears a little bit and just look at the financials real quick. XLF being another area that we saw on that sector relative strength heat map. The REL map showed our financials outperforming the S&P 500 again as we see this rotation. What really jumps off the chart for you here for the financial sector?
Yeah, very similar to what we were looking at there in energy.
Mm-hmm.
But strong trend to the far right of this chart. A string of consistent, strong blue bars.
Mm-hmm.
Interestingly, though, the oscillator isn't overbought at this point. Perhaps there's some room to run. I'm not sure. We've broken above prior highs here already, and we've certainly consolidated above those levels. But similar play out that we saw on energy. Financials looking very, very strong at the moment as well.
Yeah, it makes sense in a rising rate environment. Lending institutions start to outperform. And so if we were to take the flip side of this, right, this is traditional finance, the banking institutions, they're performing really well. A lot of chatter throughout 2021. In fact, you and I looked at that as perhaps the most important trend of the year. Let's pull up Bitcoin real quick and just see how that's performing against traditional finance. A lot of discussion around decentralized finance, DeFi topics, and perhaps alternatives to the traditional industry. Not such a great looking go trend for Bitcoin, right?
In fact,
struggling for months.
And it's really been sort of struggling for some time. Again, this fresh move from sort of 50 to 60, over 60,000. Then when that ended in the no-go right around 60,000, we've really made a series of lower highs and lower lows. And this is right now a fairly strong looking no-go trend. We've got a whole slew of these no-go trend continuation icons as we saw the oscillator get rejected at the zero line. But again, right now, important moment because we've tried to rally, and there was a lot of talk. I mean, this was almost, you could have almost bet your money on this one. The talk of the support here having lined up so clearly with where the support was earlier.
Correct.
So a lot of people were expecting a bounce here. The GoNoGo chart gives you that counter trend correction arrow, the green arrow, suggesting that in the short term there might be a counter trend move, which we're seeing now. But you got to draw your eyes to the oscillator panel and see that we are now testing the zero line again from below. And so will the oscillator get rejected again? And will it continue to find resistance? Or will it break significantly into positive territory, giving us a sense that perhaps this rally will be a little bit more than just a very short-term counter-trend correction. But a long way to go to sort of get back to where we were before with Bitcoin.
Now, as responsible technical analysts, we got to look at multiple timeframes. Could you flip this to a weekly chart real quick, just to understand the predominant bias of the trend in Bitcoin?
Yeah, and we'll finish with this. We've got about 30 seconds. This is the Bitcoin weekly chart, and we are in an important moment. Amber bars, go fish, oscillator breaking below zero. So it'll be interesting to see how this plays out, Tyler.
Absolutely. Thanks again, Alex. Thanks everybody at the StockCharts community. Check us out at stockchartstv.com, or of course here on YouTube. Make sure to subscribe, and we'll see you again next week. Thanks so much.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.